Hey everyone, welcome back to the channel. When we look up at the night sky, we see patterns, constellations, the Milky Way. They've been there for billions of years, helping us navigate the universe. The stock market might seem chaotic, but it has patterns too. Throughout history, stock market crashes have wiped out fortunes and ruined economies. But what if I told you there are clear signs, like constellations in the financial heavens, that often appear before these financial disasters? Today we're breaking down the 5 warning signs you need to watch out for. Learn from history. Our first warning sign is all about value. Imagine you want to buy a telescope. You wouldn't pay $1 million for one that only magnifies things twice, right? In the stock market, excessive valuations happen when prices get way out of whack with a company's actual worth. Think about the dot-com bubble of 2000. Companies with no profits, sometimes not even a real product, were valued higher than established businesses. The South Sea bubble of 1720 is another example. People were buying shares in a company with wildly inflated prospects. When reality set in, the bubble burst and people lost fortunes. So when you see stock prices soaring far above what a company's earnings or assets justify, be wary. Our second warning sign is rapid, uncontrolled growth. Growth is generally good, but in the stock market, too much too fast can be a problem. Think of a supernova. It's a star exploding brilliantly, but it's also a sign of instability and impending collapse. The Roaring Twenties is a classic example. The economy was booming and the stock market soared. But much of this growth was fueled by speculation, not real economic fundamentals. People were buying stocks with borrowed money, hoping to get rich quick. When the music stopped in 1929, the market crashed, wiping out years of gains. Be cautious when you see the market climbing at an unsustainable pace. Our third warning sign is yield curve inversion. Normally, you expect to get paid more interest if you lend money for a longer time. This is reflected in the yield curve, which shows the interest rates for bonds of different maturities. But sometimes the yield curve inverts, meaning short-term interest rates become higher than long-term rates. This has happened before every recession in the United States since the 1950s. Yield curve inversion is a powerful signal that the economy might be heading for a downturn. Our fourth warning sign is excessive debt and leverage. Imagine building a house on a foundation of sand. It might look good for a while, but it's incredibly risky. That's what happens when there's too much debt in the system. The 1929 crash is a prime example. Investors were buying stocks on margin, borrowing money from their brokers to buy more stocks. When the market turned, they faced margin calls, forcing them to sell their stocks at a loss to cover their debts. Fast forward to 2008, and we saw a similar scenario with the housing bubble. People were taking on huge mortgages they couldn't afford, and banks were packaging these risky loans into complex financial products. When the bubble burst, the whole system nearly collapsed. Our fifth and final warning sign is fear and greed. These emotions are powerful drivers of market behavior, often leading to irrational decisions. When markets are booming, greed takes over, pushing prices higher and higher, even if it means ignoring risks. But just as greed can inflate a bubble, fear can pop it. When investors get spooked, like during the COVID-19 crash of 2020, they sell their holdings in a panic, sending the market into a tailspin. Understanding investor sentiment is key to navigating these emotional swings. So there you have it, 5 warning signs from history that a stock market crash might be on the horizon. It's important to remember that the market is complex. These signs don't guarantee a crash, but they provide guidance, helping us navigate the often turbulent world of finance. History doesn't repeat, but it often rhymes. By understanding these 5 warning signs, you can stay one step ahead of the next crash. If you enjoyed this video, make sure to like, subscribe, and hit the bell icon for more insights from the history of everything.